Hello, everyone. Now I'm going to share our group project here, and our topic is stock portfolio analysis for the four companies: Apple, McDonald's, Tesla, and Facebook. Our presentation will include three parts: goals of the project, code interpretation, and project reviews. The first part is the goals of the project. As we mentioned on our topic, our analysis will include four companies. As we all know, these four companies come from four different industry. So the first one is to find out the correlation between the chosen four companies and then evaluate them. Are they highly correlated or have no relationship? After that, we will calculate the log daily return of each company and the correlation of them. We will show how the different weight of four companies affect the net revenue and evaluate the investment portfolio. At last, we will use the linear regression to predict the stock close price. In our program, we will use basic programming skills, such as function, loop, condition, list, and arrow handling. We also use the advanced programming skills, such as getting data online, plot graphs, regression, correlation analysis, read and write file. Here is the simple introduction of the library we use in our program. The first one is Y-Finance. It's a popular open source library to access financial data available on Yahoo Finance. Pandas is a fast, powerful, flexible, and easy to use open source data analysis and manipulation tool. NumPy offers comprehensive mathematical function, random number generator, linear algebra, routines, and more. Matplotlib library and Seaborn are comprehensive library for data visualization in Python. TA library is widely used by trading software developers requiring to perform technical analysis for financial market data. sklearn is the most useful and robust library for machine learning in Python. It provides a selection of efficient tools for machine learning and statistical modeling. The second part is code interpretation. First, we try to get 2 years stock price and volume data of the four companies from Yahoo Finance using Y-Finance library from November 23 in 2019 to today. We can get a table with the four companies: open price, high price, low price, and adjust close price. After getting the price data, we first check if any null value in the data set, the outcome is false. We also use the fill method to fill the null value for the data set, including any null value. Then we get the Apple dataset from the data frame with the four companies for further analysis. Use the print function to display the data and use the describe function to get the statistical data for Apple data. We can see the count of the rows, mean of each column, standard deviation, minimum and maximum data. In this part, we use the fig function to create the figure, then plot each companies with the plot function. We can see the Apple's volume grows dramatically compared with other three companies.
For this part, we want to know the daily variation of four company stock. Variation is the highest price minus the lowest price in one day. Firstly, we put four companies in a list and then we use the loop to calculate the daily variation for each company. We can plot a graph for daily variation. In this graph, we can see the Tesla has a higher daily variation than the other three. It indicates Tesla is very volatile and may be expected to change its value quickly over time. And we also calculate the moving average price of these four companies. The most common applications of moving average are to identify the trending direction of the stock. Moving average are to smooth out the noise of short-term price fluctuation so as to be able to identify and define significant underlying trends more readily. And we use the adjust closing price to calculate the moving average for 15 and 30 days respectively. For convenience, we use loop for calculate the result. This calculation will cause some missing value in the first 15 and 30 days. So we need to use the backfill method to fill about the moving average for 30 days and 15 days value. Here we just show the result of the Facebook as an example. And we put adjust closing price and moving average price together and plot the comparison graph for each of the company. From the graph, we cannot find any obvious findings, which may be difficult for us to do some analysis. Therefore, we put the plot including moving average price for 30 days for each company. In this graph, Tesla has a more obvious increasing in the moving average price for 30 days. So it indicates Tesla stock price are generally increasing. On the other hand, we put adjust closing price for all companies. This graph is very similar to the previous one. That's because the moving average is based on the adjust closing price. So it's not very surprising that Tesla stock price has the most of the obvious general increasing trend over time. And for the purpose of the trend, we try to analyze the return instead of the price. Then we can get more stationary time series data. As for the practical meaning, people always concentrate on log return because they simply eliminate the non-stationary property of the data set. So it makes the financial data more stable. Here we take Apple as an example. We can see that the mean of the log return is very small and the phenomenon of its fluctuation is consistent with the graph of adjusting closing price.
Then we put the adjust close of the 4 companies into a new table named DF daily return. Then check whether the date has non-value and use next valid observation to fit gap. Use SNS point pair plot to plot pairwise relationships among 4 companies' dataset. Then we calculate the correlation and plot the heat map to make the data more intuitive. We can find that Apple has the strongest correlation with Facebook and Tesla, the weakest correlation between Tesla and McDonald's and Facebook. Then we calculate log returns rate and log returns means for 4 companies. Likely, we plot the heat map. We calculate log daily returns covariance and total log daily return correlations. According to total log daily returns correlation, plot the heat map of daily log returns correlation. As we can see from the figure, the correlation between Apple and Facebook is strongest, followed by Apple and McDonald's, and Tesla and Facebook are the weakest. Next, we create a function called good correlation to determine the strength of the correlation. When the correlation value is 0 to 0.3, it means little correlation. When the correlation is 0.3 to 0.7, it means middle correlation. When the correlation value is 0.7 to 1, it means highly correlation. Then we use total log daily rate to plot the graphs for the normal distribution. McDonald's log daily return is the most concentrated among the 4 companies. Then create the function called allocation of investment to calculate different returns at different investment ratios. By making different investment ratios to different companies, we found that when investing, the greater the proportion of Tesla is, the greater the return is. And we defined the function called good investment weight to charge whether this investment is good or not. If the investment ratio is higher than 0.7, it means it is a good investment.
So we use plot function to statistics volume for Apple during 2 years. This part is what we use plot function to draw the McDonald's key chart. And then this is key chart for Tesla. We use plot function. And this is plot for Facebook. We also use the plot function. This part, we use the Taleb key figure calculation technical analysis of Python library. Taleb is an open source Python library that analyzes historical data on the stock market, such as stock prices, volume, to predict the future prices or market direction so that we can invest accordingly, and use a relative strength index. Relative strength index is a technical indicator used in financial market analysis. It aims to map the current and historical strength or weakness of a stock or market on a basis. And also we use the double exponential moving to weighted average. For this part, we draw the K value and the D value plots, and we use the Taleb and the plot function to use the low point and close the price to draw the key values. Then there is a linear regression where we use the method of train model, and then this part is about modeling and predicting future price trends. Here we clean the data and then establish a regression model to train model, and then we calculate the coefficient. It includes the important index like RSI, DEMA, EMA, SMA. Moving on, we can see the scatters plot. We use predict Y and the Y tester to make this plot, and according to the movement, we can do the predictions. The chart below is a bar chart with the close price. We use the data frame to establish the prediction model. After drawing the actual value and the predictions, we can get these two lines, put them together, and you can see the difference. For this part, we use the evaluation matrix to predict the price. There are 3 evaluation results. MAE is 0.31, and MSE is 0.11, and RMSE is 0.33, which means that the model fits the data well. And this part is the read file, how to read the CSV file.
Third part is the reviews of our project. From the previous analysis, we can draw conclusion that Apple's log return is the most correlated to Facebook. So by these together can boost our investment return. Apple's daily price variation doesn't change much when compared with the Tesla. Hence, buying Apple and Tesla can reduce financial risks. Buying Apple, Tesla, Facebook together is likely to obtain best returns. The RSI of Apple changed significantly compared with other tier library figures. Also, there are some interesting things we can see in the analysis. For example, Apple, Tesla, and Facebook's daily returns are more centralized than McDonald's. What's more, the linear regression seems to predict the model quite well. There are some points we should improve. For the prediction of the price, many other factors will affect the stock price, like the company performance, the trend of the industry, the domestic, economic, environment, and so on. We need to get more information, not only the numerical data, but the texture and spatial data. That's all of our presentation. Thanks for your listening.